Hey everyone, welcome to Ready, Set, Launch, sponsored by the South Central Kentucky Small Business Development Center. Happy to have you here with us tonight. Wanted to take care of a couple of housekeeping things just before we get things rolling. It is 6 o'clock p.m., which is when we said we were going to begin. So hopefully you're able to log in successfully and be able to see Jim and myself. In the chat room, Jim will be there answering questions, addressing any technical issues that we run into. So if you have any problems there, feel free to type into the chat room. Jim, you might want to let people know there, just type in. If they see that big play button in the middle, they need to go ahead and click that to get things started. So you might want to let folks know that way. But we're going to kick things off with a short video just to kind of set the mood for the night. And hopefully you will find this beneficial. Basically, this is a great video that's going to give you some advice on what it means to be a small business owner. So sit back and enjoy some great entrepreneurial advice from some tremendous business leaders.
The best advice to a small business owner, or for that matter, to a large business owner, is never stop thinking about how to delight your customer. Not to satisfy your customer, but to delight your customer. And when you wake up in the morning, start thinking about it. During the day, think about it. At night, think about it, and then dream about it. And no company's ever failed that had millions of delighted customers. And you start with them and you get them one at a time.
There's no substitute for hard work. The best time you're ever going to have is when it starts out just you, and it'd be great if it grows into a wonderful, big, profitable company. But you're never going to be happier and more satisfied than you are in the first year or so of getting your business going, because you do every single thing. You sweep up when everybody goes home. You're the first one in. You plug in the coffee pot, so when your people come in, they have hot coffee and can get straight to work. You work through lunch, set an example for them. But there's no substitute for hard work. People say luck, yes, but the harder you work, the luckier you get.
My advice to a small business owner or any entrepreneur would be not to be discouraged if the business you end up with is not the one you started out to pursue. Because so often you encounter difficulties, you encounter failures, and the important piece is to learn from each of those very quickly and to pivot and to move on to the idea that works.
Of course, you have to be close to your products, close to your customers, and think about them. That's the most important, but don't forget to think about your business, what your plans are, what you want to do next, how to take your business to the next level. Again, think about being in your business, but think about your business as well.
My best advice is to really work hard to clarify what your purpose is and be able to articulate that, be able to communicate it in a simple sentence. And the reason that's important is as you bring people into your company, I think the most important question you ask them is, why are you here? Why do you want to join this company? And if you hear that purpose back, if you hear that passion around that purpose, it makes everything a whole lot easier. Any skill can be learned and taught, but passion cannot.
Being an entrepreneur can be a roller coaster ride at times. You will have great days, you will have not so great days. You may even from time to time have an awful day. You've got to stay focused and stay level-headed and keep your feet on the ground.
Companies that do well at some level, even though it may not be written down on a piece of paper, need to have kind of a clear strategy of why they're different, why they're adding value, why they're producing something special that customers need and that they're not getting now. So I think if there's a clear sense of strategy and you can get all the people aligned around that, then you get a lot more power than if you're just scrambling and working harder and harder and without that clear direction. So that's my one piece of advice.
Webinar's ended. Okay, folks, just do us a favor. If you're in the chat room, type something for us there just so we can know that we've got you. It looks like we might be having some technical difficulties. So if anybody's here, just go ahead and let us know. Okay, it looks like it's just me and you, Jim. We've done something wrong. So we're going to end this and see what's going on. Oh, Shauna, you're here. All right. So we do see somebody. Somebody made it into the room. Apparently, we're having a weird issue where the links that went out actually show to a recording that had, or a webinar that had already ended. So, all right. Tabitha, thank you for that. Already started taking notes. Very good. Well, we're going to continue on then since you guys are here. So, again, my name's Kevin Norville. This is my buddy, Jim Reams. This is my buddy, Jim Reams on this side. We are with the South Central Kentucky Small Business Development Center. And so many of you probably are already aware of what we do. You may have contacted us for other needs, but basically we're available to help you start, grow, and succeed in business. That's really our main purpose. So we're going to start tonight by showing you some slides and going through a little brief agenda of what we want to cover tonight, because there's a lot we want to try and get to. And so we want to get started with that as quickly as possible. First things first, just a little bit about us. SBDC has been around in the state of Kentucky since 1983. So we've been serving the Commonwealth and people who are wanting to start their businesses since that time. As I mentioned, we exist to provide in-depth, hands-on business consulting services, both to entrepreneurs and existing businesses. As far as a little bit more about where we're located and kind of who we serve, Jim and I cover 15 counties, which you can see here on your screen. And we have offices in both London and Somerset. So let's go ahead and get into our agenda for tonight. If you have any issues with the sound, or you can't hear us, or it sounds too loud or something, just please let us know in the chat room, and Jim will take care of that so we can make sure that this experience works well for you. So tonight's agenda is really covering, as I said, a variety of topics related to starting a small business. And it's going to continue next Thursday. So next Thursday, we're actually going to have a CPA from Baldwin & Associates. It's going to be answering your questions related to taxes, legal structure, and bookkeeping. So it's going to be a great workshop for you to get questions answered that might be specific to your individual situation. But tonight, we're going to cover feasibility, market research. We're going to cover from a high-level overview about legal entity options, just what options you have available to you when you're starting your business. We're going to talk about what it takes to register and license your business in the state of Kentucky. We're going to go with a business plan overview. And then we're going to get into some details about, what are lenders looking for when you go to borrow money to start a business, and what other ways are there to finance your business besides borrowing money. And then Jim's also going to share with us about, what business owners should be looking for when they take out insurance for their business. And then hopefully we will address your questions as well. So any questions you have that you're thinking of that you want to make sure we cover, just go ahead and type those in the chat room and we'll get to those. So having said that, we'll go ahead and dive in. This is a great quote that I like to start off with, basically talking about what it takes to run a business. The mechanics of running a business are really not very complicated when you get down to it. You got to make some stuff and sell it to somebody for more than it costs you. There's just that and about a million more details. And so I think John McCaffrey there really hits the nail on the head, and many entrepreneurs kind of feel this way when they're starting up, right? There's so many details involved with starting your business. How can you possibly keep track of them all? Well, hopefully that's what we're here tonight to share with you, is the ways in which you can actually make sure you're covering everything you need to cover when you're starting your business. So when we start talking about business ideas, we typically come to that from the perspective of feasibility. And so we talk about, is my business idea feasible? So when people ask us, is this a good business idea or is it a bad business idea? We really try to frame that in, well, let's not talk about good or bad. Let's talk about how feasible is it? So this chart here kind of shows you the approach that we take to determining the feasibility of a business idea. Starting with the idea, we want to look at it through some personal considerations, market considerations, financial considerations, which hopefully lead us to a decision as to whether or not this business is worth pursuing. If it is, we want to proceed with developing a business plan. If it's not, we want to reevaluate that idea and start the process over again. We don't want to give up on it. So as we look at this, we're going to begin with those personal considerations. So that's where we're starting on the chart when we look at feasibility. Now, personal considerations are just that. They're personal and unique to you as an individual. But some of the questions that will help you to process the personal considerations you need to be thinking about are listed here. Are your personality characteristics suited to small business ownership? In other words, are you the type of person who likes to be in charge? Do you like making decisions? Are you capable of negotiating? Do you like to supervise others? Those types of personality characteristics really play into your success as a small business owner. Another personal consideration, how risk tolerant are you? I know that personally, I was a lot more risk tolerant when I was 25 than I am now at 45. Things change a little bit when you have a wife and kids and a mortgage. So I'm not as risk tolerant as I was when I was younger. Does your business concept match your lifestyle? If you're the type of person who likes to spend Saturday at the lake, running a bakery is probably not going to be for you. Those types of things that require your attention and your time and your presence in the business are going to determine how that affects your lifestyle. Are you willing to work 12 to 16 hours a day to make your business work? That's a big thing, right? A lot of business owners may go into business thinking they only have to work a few hours a day and not 12 to 16. My dad is fond of saying that a good entrepreneur really only has to work half a day. It doesn't matter if that's the first 12 hours or the second 12. Does your family support your decision to start this business? That's a key thing, especially if you're married and have kids, or maybe your significant other. Do you have the support of your family in starting this business? Because if you don't, that's going to add even more challenges to your startup process. And then if we didn't discourage you enough with all those questions, are you prepared to lower your standard of living for the next several months and or years while you get this business off the ground? Now, certainly we hope that's not the case, right? We hope it's a tremendous success once you begin, but are you prepared to put in the work and sacrifice that it's going to take to make sure your business succeeds? Now, one of the things we're going to give you, we call them handouts here, but what you're going to get is an email with some PDFs. So after attending tonight, you're going to get an email that has what we call the characteristics of successful entrepreneurs. And that's not my characteristics or Jim's. That's actually some research that's been done to identify what are those personality characteristics of successful entrepreneurs. So it's a nice little survey that you can actually go through and take and just be honest with yourself and say, okay, successful entrepreneurs typically are decisive decision makers, and just evaluate yourself on that particular characteristic so that you can say, yes, I think I'm going to be very much like this, or this is somewhat like me, or this is not like me at all. And that's going to help you determine if your characteristics are suitable for entrepreneurship. So these are just some screenshots of the PDF that you're going to get via email. The other thing we're going to send you is a PDF handout called My Business Goals. And what we want you to do is fill this out, print it out, hang it on your refrigerator. Because what this is going to help you to do is really see what your plans are for your business. A lot of times people may have goals or thoughts in their mind of what they want the business to become, but they never write them down. So this is going to force you to actually be specific about what you want your business to achieve and what it's going to look like, maybe next year, 3 years, or in 5 years from now. So this is another PDF you're going to get via email. So as we move on along this feasibility path, we go from personal considerations to market considerations. And the market considerations really deal with, is there demand for the type of business that you want to start? So how do we determine if that demand exists? We do that through market research. And you're probably familiar with the concept of market research. You may have already done some market research for your business. But the goal of market research is to make sure that there's no surprises later on. You want to do all your homework in advance so that you know your idea is valuable in the marketplace and that people are willing to pay you to do those particular things or to provide that particular product. So how do we accomplish market research? Market research is done in two ways, through primary data and secondary data. We're going to talk a little bit about both of those. Primary market research involves you talking to a customer. So simple enough, you can go out and survey individuals on the street about your business idea and ask them what they think. Even better, talk to your friends and neighbors, colleagues. Ask them about the type of business you're wanting to start to get their feedback. All of those things go into primary market research. That's you actually talking to potential customers. Now, if you're already in the industry that you're wanting to start your business, you might even be able to do interviews with contacts in the industry. You can survey potential prospects. Even talk to vendors or suppliers to get an idea of what's happening in the industry right now. Another great way to do this is observe and interview owners of similar businesses. So let's say you're wanting to open a coffee shop. Now, if there's a coffee shop already in town, that business owner is probably not very likely to share a whole lot of great market research with you. But if you go a few towns over or maybe out of state, the next time you're on vacation, stop into a coffee shop and talk to that person. They're probably going to be much more willing to share information about their struggles and about what they found to be successful in their business. So look for those ways to connect with other businesses that are doing what you want to do. That's going to be a great source of market information. Now, secondary data sometimes is a little easier to get a hold of and sometimes a little easier to understand because it's research that's already been done for you. So a great example here would be things like market studies. A lot of times you'll see trade associations or industry groups putting out, publications about what's happening in their industry. Those are tremendous sources of information about the industry you're planning on going into because someone's looked at it from a very macro perspective. They've looked at it for the entire industry. Maybe it's all businesses in North America. So instead of just looking at coffee shops in, let's say, Pulaski County, they're talking about what's happening in coffee shops all across North America. A great place to find access to secondary data is through our public and university libraries. Our libraries have a tremendous amount of information available, and all you have to do is go ask. The librarian will most likely be very surprised, number one, that you know about these types of things because they tend to not get a whole lot of requests for this. But what we found through our experience talking with librarians is they have access to some really great databases that will really help provide you with tremendous industry information that's already been done. So one of the things we use, and we can look at a couple more of these examples here, trends and statistics. You want to see what's happening over time, not just a particular snapshot. And the Risk Management Association is one of those that, in this case, actually is used a lot in the banking industry. So where are you going to find this information? We mentioned your public library. There's a ton of resources available there that you may not be aware of. All you got to do is go in and ask. Obviously, the benefits of using the service is the librarian is there as a free resource to help you get the tools you need to get your idea off the ground. In terms of what some of that looks like, I know at the University of Kentucky, there's an actual entrepreneurship research guide that will allow you to access information on all different types of businesses. Say you're wanting to open a childcare center or a restaurant or a food truck. There are specific guides related to those industries or those businesses that you can access through the UK library and other universities as well, with your community college or your local regional university. This just gives you a screenshot of what those look like. It kind of doesn't display here really well, but you get the idea that basically there's a lot of information here that they have already done the research. They've already done all the hard work to compile all this stuff for you. So all you have to do is go access it. Now, the United States Census is another great resource for you to find existing information about particular businesses. The Census Business Builder is actually a great tool to show you in a graphical representation what businesses are in your area and then the types of customers that you're going to most likely interact with. Again, it says here, it presents that data for either a single type of business and geography. So you can specify a zip code and actually it'll drill down into that level of detail for you. Now, one of the tools that's available through the SBDC network is called IBIS World. And IBIS World publishes information on an annual basis. They're constantly updating it on just about every type of business you can imagine. In this case, what we're using here is the example is a coffee shop, right? So I'm going to share with you just a couple of screenshots of what this looks like. The industry at a glance. It takes a look at the entire industry for coffee shops throughout North America, in this case in 2018. Shows you what's happening revenue-wise, how fast is the industry growing, what's it projected to grow at over the next 5 years, and then basically what number of businesses exist already that are doing this type of work. One of the great things that I find about IBIS World reports is they identify a total of 250 what they call key success factors for any particular business or industry. And then they rank those as being the ones that are most important for a particular business. So in this case, for the coffee shop industry, you can see here, some of the key success factors are the ability to have a clear market position, have effective cost controls in place, the ability to franchise your operations, having your product sold at high-profile outlets, market research and understanding, and then access to a multi-skilled and flexible workforce. Those are all things that IBISWorld has identified as key success factors for people who are starting coffee shops. So great amount of research. So that takes us from market considerations. Then we start thinking about the numbers. And when we're talking about financial considerations, we're talking about a number of different things. So let's kind of look at this in a little bit more detail. When we look at financial considerations, one of the areas of expertise that the SBDC provides is really help in putting together financial projections. We help you sit down and look at what is your business most likely capable of doing over the next, let's say, 3 to 5 years. But we tip to start with what you estimate your costs are going to be. So we want to get a good picture of what the cost structure of the business looks like. So you can see here, we do things like helping you estimate your fixed assets requirements. You know, do you have to buy a building? Do you have to buy equipment? What all's involved, those big purchases that you're going to have to make in order to get this business off the ground. Then we're also going to look, we want to estimate and itemize your startup expenses and any deposits you have to make. You know, if you're opening in a new retail outlet and you're a first-time business owner, you're probably going to have to pay a deposit. Maybe that's a deposit for rent. Maybe it's a deposit on utilities. It might even be, you know, internet, any of those types of things. So we want to get a good, complete picture of all of the things that you're going to need in order to start your business so that we spell it all out in great detail. Then we're going to look at what your ongoing costs look like by month. So we want to list those out. You know, you're going to have rent, you're going to have utilities, you're going to have internet, you're going to have credit card fees. We want to spell all those things out so that we know exactly what we're dealing with. And then finally, we work with you to get an idea of what you think your sales will be and what the realistic figure is for your sales revenue. So another piece of homework, you're going to get another sheet that actually is a spreadsheet, and it will show you what your, actually it will list for you all the different categories of startup expenses. And it's your job to go in there and fill those out. So you can go in, list all of those things you know you're going to need to buy, and put them all in that spreadsheet so that we can talk about it later. So that's coming in your homework email. So let's talk a little bit more about financial considerations. And I'm going to give you a specific example here. So in this particular business, we've identified some things that we're going to have to get started. We say we're going to need about $70,000 in equipment. We think we need about $10,000 in additional startup expenses. We want to have about $10,000 in inventory. And then we want to have $30,000 in the bank for working capital. So our total cash requirement for this particular business is $120,000. Okay. Now, if you go to a bank and apply for a business loan, at most, the bank is going to be willing to loan you about 80% of your project. So in this case, that means you're going to have to come up with 20% or $24,000 of 120. So the bank's willing to loan 80%, which is $96,000. You got to find $24,000 to start your business. No bank is going to loan you 100% of the project. It's just a common misconception, I think, that most people think they can get a loan for the full amount of the project. The bank wants you to have some of your money invested as well. After all, why should they put money into your business if you're not willing to? So if we look at that, where's that money going to come from? So there's a lot of different sources of financing. Obviously, it can include your personal savings. It can include your friends and family. You'd be surprised how many businesses are started with the help and financial backing of friends and family. Debt means just that, means a loan that you have to pay back so you can get a loan. Equity means someone is willing to invest in your business in exchange for a small portion of ownership. We tend to see that for larger businesses, tend to be in the high-tech area, or at least businesses that have the potential to scale very quickly. Grants, by far, is the most common question that we receive at the SBDC. It's so common, in fact, that we've created a publication all about grants. I'll be happy to send that to you. But it used to be that I would tell people that there are no grants available to start a business. But I can't say that now, right, Jim? Because there are grants available, but they're very specific grants for certain situations. I have a client right now that is basically in startup phase, and he's gotten 2 grants already, and he's working on a 3rd grant. However, I don't want to give you the misconception that these are widely available and they're very easy to get, because they're not. Usually grants are related to a particular industry, a particular area of research, maybe. And usually they're sponsored by an agency or an organization that has very specific requirements of you if you actually receive a grant, of what you have to do in order to basically satisfy those requirements. So that money comes with strings attached, as we like to say. And you have to be able to perform the work in order to be able to keep that money. So while grants sometimes are an option, it's not an option for the majority of businesses. So hopefully that clears that up. The other thing that's come up here recently, and probably in the last 5 to 10 years, it's really seen an increase, is crowdfunding. You'll have probably heard about crowdfunding from different things you've seen online or on the news. Crowdfunding, we're going to talk a little bit about in more detail, but that's things like Kickstarter. And so we've got an interesting example that I want to share with you here in a moment. So to go into a bit more detail about debt financing. Debt financing means that basically you have an obligation to repay that loan. The loan is set up so that you're going to make payments back to the bank or the lending organization, and those payments are going to be based on either fixed or variable interest rate. The interesting thing, or the thing that's good about debt financing, is you're not giving up any ownership of your company when you receive a business loan. You maintain complete ownership of the company. Usually, though, the key factor in determining whether you can get approved for a business loan is your ability to demonstrate that you have cash flow to be able to repay that debt. Jim's going to talk a lot more about that later on tonight. Collateral or personal guarantees, it says often required. I think that's usually always required. In other words, the bank's going to ask you to stand behind that loan personally. And a cash injection is required, and that's usually 20%. We talked about that earlier on. So the bank's not going to loan 100%. Commercial loans. Commercial loans are just that, just as we talked about, that's a business loan. They can come in different forms, though. They can be a term loan. It can be a line of credit. It can be a letter of credit, which we often see for businesses that are engaged in exporting. Microloans are a particular loan that works for a majority of small businesses if they're seeking an amount less than $50,000. So I think we've got a poll that we'll put up that actually just tries to get you all to give us a little bit of feedback here on what we're looking at for financing, if you think you're going to be needing financing, in other words. Jim may have that. So I'm going to go ahead, and while we're getting that up, I'm going to talk to you a little bit about, if you go beyond 50,000, there are specific programs available by lenders to accommodate those requests. A couple of SBA loan programs that we see quite often are called the 7A, or the Guaranteed Loan Program, and then the 504 loan program. Those tend to be come into play when you're actually purchasing a building or something significant in nature, capital equipment, that type of thing. So one of the programs that we have launched in some of our areas is called FundSmart. And so the way this program works is, if you don't have an existing banking relationship, FundSmart is a great way for you to connect with a number of banks in a very short amount of time. So basically the process is, you work with the SBDC to prepare your business plan and your financials. We will work with you to develop a pitch that you will then share with a number of lenders. Basically, that project is submitted to, let's say, 5 or 6 lenders at one time. And then any lenders that are interested in your project can work with you one-on-one to establish that type of deal. Benefits there, obviously, it saves time and effort. And then in the end, banks are ultimately competing for those types of projects. So that's called FundSmart, and that's something that we can work with you more on individually if you're interested. We talked about microloans. We mentioned them earlier. I just wanted to mention where you can find a microloan. In our region, which is those 15 counties we shared with you earlier, microloans are available from a number of different providers. And so 3 of them I want to share here with you. We have Kentucky Highlands Investment Corporation, which is where we're at actually broadcasting from right now, based in London, Kentucky. We have Southeast Kentucky Economic Development, which is also known as SCED, based in Somerset. And then we have the Mountain Association for Community and Economic Development, which is also known as MACED, based in Berea. So those are 3 different microloan providers that serve our 15-county area. So any loan up to and including $50,000 would qualify as a microloan. A question we often receive about SBA is a lot of times entrepreneurs may come to us and say, I want to apply for a small business loan through SBA, or I want to apply for an SBA loan. When in fact, the process is a little bit different. You as the borrower actually apply to your bank. And then your bank, if they decide that the SBA guarantee is something they want to have, they will apply to SBA on your behalf. And then SBA, its role is if it approves that particular loan application, it will guarantee a portion of that loan on your behalf to the lender. So it makes the lender much more willing to loan you money when the SBA is willing to stand behind it. So that's kind of the way that process works. Now, equity financing is a bit different than debt financing. At its core, you're still raising money, right? But you're raising money in exchange for a piece of ownership of your business. Investors will be willing to provide you with money in exchange for that investment or exchange for that equity piece of your business, but they also expect a pretty good return on their investment. So I'm sure you've all seen the show Shark Tank. That's what we're talking about when we talk about equity investment. Now, technically, you don't have any direct obligation to repay that cash, right? You have an investor, and if the business isn't capable of doing it, basically they're in the business with you. They own a portion of that business. Equity participants, though, only make money if the business succeeds. So there's a motivation there for them to provide some additional assistance beyond just cash. Now, as I mentioned, a lot of times this is projects that are scalable to a pretty significant amount is what usually attracts equity investors. By and large, equity investors will not finance what we call a lifestyle business or a Main Street business. So if you're opening up a pizza shop, you're probably not going to attract any equity investors. However, equity investors can come from family and friends and your close acquaintances. You can certainly give folks a small percentage of your business in exchange for their investment. Grants we've already covered, that it's sometimes an option, but very, very rarely is that an option. Now, crowdfunding, as I mentioned, is a little bit different. You've probably heard about it already from different folks, but I wanted to break down a couple of things about it. But basically it's a method for obtaining funding by asking people to invest in your idea from an online community. And there's different types. There's donation-based, which means that there's no financial return expected by the person investing. There's reward-based, which means that donors receive something. It's usually some type of gift or reward for investing in your business. And then there's equity-based, where investors give money in exchange for a piece of the company. One of the more common or frequently used platforms for crowdfunding is Kickstarter. You've probably heard about it or read about it. It wasn't the first crowdfunding platform, but it's probably the most well-known. It's raised over $2 billion since coming online. You can see with Kickstarter, if a campaign is successful or if it's unsuccessful, meaning that you don't raise the amount of money you were hoping to raise, then no money changes hands. Basically, it goes back to the original people who contributed it. However, if you do meet your funding goal, Kickstarter keeps 5% as far as their processing fee. Indiegogo is another platform that's available for crowdfunding. Works very similar. However, you do have the option to keep the money even if you don't meet your goal. So that's a little bit different format than Kickstarter. This is interesting because there is, I think, a pretty decent success story in our region that has been able to use crowdfunding as a way to get their business off the ground, and that's Native Bagel in Berea. Katie Startzman partnered with MACED, again, one of the economic development organizations in our region, using what they have is a CrowdMatch microloan product. So as you can see here, it matches dollar for dollar what the business is able to raise with a microloan, so up to $10,000. So Katie raised, you can see, $5,600 on her own, and then Mason provided her with a low interest loan of $5,600 to match. So gave her a total of $11,200 for equipment and signage, and really helped her get her new retail space ready to open. So it's a pretty cool idea. So I think some people are probably recognizing that crowdfunding might be an option for them when they may previously have thought that that wouldn't be that great of an option, especially in this case when you're not looking for all that much money. So as we talk about all these financial considerations, right, we're talking about financing your business. One of the key decisions we need to decide early on is how will your business make money, and will it make money? Well, how do you know for sure that it will make money? One of the tools we use is called a break-even analysis. A break-even analysis is listed here as basically the break-even quantity, say you're selling a product, is determined by taking your fixed costs and divided by the average price per unit less the average cost per unit. So let's walk through what that looks like. Let's say you own a jewelry store, okay? So you're taking your jewelry store hobby and you're gonna turn it into a business. You have $1,000 per month of fixed costs, things like rent, utilities, equipment, but your variable costs for each necklace are $50, and that's your materials and labor. So you think you want to charge $70 per necklace, since that's what similar pieces are selling for. So your break-even quantity would be $1,000 divided by 70 minus 50, right? We take the selling price less the variable costs, means $1,000 divided by $20 equals 50. That means you need to sell 50 necklaces a month at $70 each in order to break even, okay? For every necklace you sell over 50, that's profit. For every necklace you sell under 50, you're losing money. So break even is a great tool to have, because what you want is you want that number in your head every day when you go into work. My break even quantity is this. This is what I need to break even. This is what I need to make money. And this, if I don't sell that, this is where I'm losing money. So break even quantity is a great tool to use. And it really helps put your business in perspective. You know, how realistic is it for you to sell 50 necklaces a month at $70 each? So those are questions that you can answer using the break-even tool. All right, so I want to pause for just a moment, take any questions that y'all may have up to this point. Again, Jim is here in the chat room. He'll be addressing any questions. If we don't answer them right now, we'll hold them on to later, maybe. But so far, we've covered feasibility, right? We talked about personal considerations. We talked about market considerations. We talked about financial considerations. All of those things determine if a business idea is feasible or not. So any questions, feel free to ask those right now. And we'll pause for just a moment to let you ask those. I do want to mention, we had a bit of a rough start to our webinar beginning, so I apologize for that. But one of the things I wanted to mention up front about the webinar format is it has some great advantages, right? The advantage is you all didn't have to get in a car and drive somewhere tonight to take this class. Some of the disadvantages, though, is that you can feel somewhat detached, maybe not a part of the group, as if in a case of if we were meeting actually in person. So the chat room is one of the ways that we can interact with you. So if you have those questions, or if you have comments or suggestions, feel free to use that chat room to communicate with us. The other thing I would encourage you to do is use this time as an investment, right? So hopefully you're in a room away from distractions to the extent possible. You're able to take this next, let's say, hour and 15, 20 minutes to really focus on what you're wanting to do with your business and get the most from the material that we're sharing with you tonight. So we hope that's the case, but we invite you again to share your questions and comments with us in the chat room. And having said that, Jim, I don't see any questions, so we're going to go ahead and proceed. Legal entity options. How do you operate legally? How do you operate your business legally? So we're going to cover this from two different angles. Tonight, I'm going to give you an overview of legal entity options. And then next week, our CPA is going to give you the tax side of the equation. Because when we talk about entities, there's really two considerations to think about. There's the legal side, which is, am I protected for anything my business does? Are my personal assets protected? And then there's the tax side. How much money am I going to have to pay for having this type of entity? And so you want to find the right balance between legal protection and tax advantages. So what we're going to cover tonight are the basic organization types that exist for entities in Kentucky: sole proprietor, partnership, C Corp, S Corp, and LLC. So let's dive in. A sole proprietor is by far the most common and easiest to form of a legal entity. However, by definition, a sole proprietor is the business. The business is the owner. So there's no legal distinction between the owner and the business. A sole proprietor has the maximum risk exposure to the owner for any liabilities of the business. Now, it's pretty simple to operate. In fact, any income that is received by the business is just taxed as part of the business owner's personal 1040 tax return. Sole proprietorships also, you need to know, basically, since the business is the owner, sole proprietorships go away if upon your death. So once that happens, your business is gone. Partnership can be formed by two or more people. In a general partnership, basically those owners share the liability. In a limited partnership, the liability of the partners is limited to the extent of the investment. However, for most considerations, the best way to think about a partnership is it's a sole proprietorship with two people. Okay, it operates very similarly. It's dissolved upon the death or departure of one of the partners. You do need to have a written partnership agreement. That's very important. And it's also important to note, all partners are liable for each partner's actions with or without consent. So it's very limited in terms of its benefits that it provides for your liability protection. It's not any better really than a sole proprietorship. Now, corporations come in many different flavors, but usually when you talk about corporations, you're talking about C Corp or S Corp. C Corps are usually considered big corporations, right? They are a separate legal entity. They require articles of incorporation. You can have single or multiple owners of that corporation. The great thing about a corporation is it provides liability protection to the investors. So if the business gets involved in a lawsuit and the person suing you wins the lawsuit, they can only go after assets of the corporation. They can't touch your personal assets. So that's an advantage, right? And that exists in all types of corporations as well as LLCs. However, the big negative on C Corps in particular is that they're taxed twice. You're taxed at a corporate level for the organization, and then you're also taxed any money you take out of the business. C Corps are often used, especially for people who are looking to raise money through the sale of stock. That's one of the only, one of the main ways that we'll see an organization form a C Corp is when they're looking to sell stock to raise money. Now, an S corporation, which I learned from our CPA friends is also known as a small corporation, is basically a corporation without the double taxation. So really, that's the best way to think about it. You have some limitations there, like you can't have more than 100 people being shareholders. But the good thing is that the income flows to the stockholders and helps you avoid that double taxation at the federal level. And then you get that limited liability protection as well. Now, one thing that people often are maybe a bit surprised about when they form a corporation is they may not realize that every action of the corporation has to be passed through some motion, right? So I had a client just last week wanted to form an S corporation, and they went to set up a bank account, and the bank said, look, we need a resolution in order to establish a bank account for this corporation. So there's a level of formality that exists with corporations that some people, just don't like, or they may think, no, this is not necessary. But unfortunately, it's required. So just keep that in mind. Now, I should preface all of this that we're talking about by saying I'm not an attorney, neither is Jim, and we're not CPA, so we cannot legally give you legal or tax advice. However, I can tell you and share with you our experience, which is that the vast majority of business owners that we work with form LLCs in the state of Kentucky. LLCs are limited liability companies. Okay, there's several advantages to them over some other entity options. One is it can be a single member or multiple member. Now, what that means is you can have one owner or several. You do need articles of organization, but that's not as detailed as, say, articles of incorporation. You get the liability protection of a corporation with an LLC, but you don't have the administrative burdens of passing a resolution every time you want to set up a bank account. LLCs are recognized in almost all states. I think they're in all states now. And so when you form an LLC, the interesting thing here is that an LLC is a legal entity recognized in almost all states, except the IRS does not recognize an LLC. It recognizes your ability to form one. It just says, I don't know how to treat an LLC for tax purposes. So you have to tell the IRS how you want to be taxed. If you're a single member LLC, unless you choose another option, the default tax treatment will be that of a sole proprietor, meaning that all of the money that is made by the LLC is passed through to the personal tax return of the main owner or the single member owner. Now, if you're a multiple member LLC, the default tax treatment is a general partnership. Now, that just means that it's going to share that tax burden equally. The thing about this is you can choose to specify that you want to be treated as an S corp for tax purposes. And then you can specify things like, well, I'm going to be treated as 70% owner and my partner is 30% owner, or vice versa. So you have different tax treatments with an LLC, but you can choose those. And I would encourage you, if you're looking for a specific way to maximize your tax savings, consult your CPA, because they'll be able to help you figure out, based on your specific situation, what's going to be the best option. Okay. So again, next week, in regards to legal entities, you're going to hear a lot more from the tax side of things. So I encourage you, if you have questions about business taxes, about what you owe, about how to file, about, what's this thing about quarterly taxes that I've heard about for business owners, come prepared to ask those next week, because we're going to have a CPA from Baldwin on the webinar, and they'll be leading that portion of the material. Now we're going to get into what else is involved to make sure your business is operating legally. Permits, licenses, registration, hiring employees, those types of things. In Kentucky, the Secretary of State is the entity that is charged with maintaining the registration information for all legal business entities. And they do that through what they call the Kentucky One-Stop Business Portal. We'll show you another screenshot here in just a moment. The One-Stop Business Portal is where you're going to go when you're ready to, let's say, register your LLC. It's also where you will go when you are ready to set up your tax accounts for the state of Kentucky. So let's say you're opening a retail store and you need to get a reseller tax permit. This is the way you're going to do that. So all of the processes involved and all of the forms involved with registering a business are now consolidated into this one website. And so you access all of this through onestop.ky.gov, as Jim just put in the chat room. And so from here, this is the steps that they identify. You choose your name and structure, you register your business, you get your tax numbers. It talks about insurance requirements, license permits. If you're going to have employees, you register that here so you can get your withholding accounts. And then you can identify any other regulations that may be specific to your business. So the Secretary of State's done a great job of consolidating all of those areas where a business owner needs to interact with state government into one simple way to do that, and that's through the One Stop. Now, one of the things we're going to provide you as well in that email is a business startup checklist provided by Kentucky One Stop. It's a good reference document. But I also want to encourage you that when you're ready, you can schedule an appointment with Jim or myself, and we will sit down with you to register your business with the Secretary of State. We'll help you walk through that process and make sure you get your employer identification number from the IRS and make sure that your business is registered the way it needs to be. So that's an option that's available to you. Again, as I should have mentioned at the beginning and did not, there's never a fee involved with working with the SBDC. Your tax dollars have already prepaid for our services. So there's no fee involved with that. However, when you do register your company with the Secretary of State, you do have to pay a $40 registration fee for that. So just be aware of that. We do that all online. Okay, one word of caution, because I've seen this happen on more than one occasion. When you register your entity with the Kentucky Secretary of State, be sure that this is actually something you're going to go forward with, right? So if there's any doubt, I would wait and register once you're absolutely certain that you're going to start this business, because there have been instances where a person registered that entity, and that entity doesn't go away just because you may stop business. Because it is a legal entity registered with the state, you have to dissolve that entity if you no longer wish to operate that business. So, and to dissolve that entity usually requires another fee to basically make that entity go away. The other thing that's happened that we've seen is when someone starts the registration process and they think they didn't get all the way through, when in fact they did, they get a tax bill next year from the Secretary of State. Now, as I mentioned, an LLC, for instance, is not taxed separately from the owner. However, in the state of Kentucky, there is something called the Kentucky Limited Liability Entity Tax. Now, what that is $175 that you have to pay every year just to maintain your LLC or your S Corp for that matter. So to avoid that, make sure that you're ready to take those steps forward in starting your business before you actually register it with the Secretary of State. All right. Shifting gears now and talking about business planning. Business planning can seem like a very daunting concept, but we like to break it down for you in a very simple way. And by start, we say, look, the plan itself is really, as Dwight D. Eisenhower said here, we stole this quote, plans are useless, but planning is essential. So what we want to focus on is the process of planning is what's going to make your business have a greater chance of succeeding. The plan itself may not be as important, but the process that you undertake to actually develop that plan is very important. Now, this is an outline of a business plan that we recommend at the SBDC. You can see it starts with a table of contents, an executive summary, but then it gets into a summary of the business or general company description. What products and services are you offering? Your marketing plan, which includes both an analysis of the market as well as your marketing strategy. So it's not just advertising. Then it goes into your operational plan. How are you going to do the work of the business? The management and organizational plan. Who are the team that you've put together to run the business? And then your financial data, which oftentimes is the most daunting of all, actually putting together a 3-year financial projection that says, here's what I think the business is going to do over the next 3-year period. Now, we use a service that we highly recommend. It's a great online tool known as LivePlan. And LivePlan helps you to build your business plan with our help. So the way that works is it's a service, you have to subscribe to it, but it's a service that you can actually pay for, and you can make myself or Jim a consultant with your plan so that as you're working on, let's say, the narrative portion of the plan, we can be working on the financial information. It's a great tool, so let me show you a little bit more about it. I promise we don't like to do a whole lot of commercials, but this is one we thought would be worth your while. So take a look.
So you're an entrepreneur and you're ready to start pitching your idea to lenders and investors. And you know what they're going to ask for: your business plan. But you don't have an MBA. You aren't an accountant, and you aren't getting into business to stay up all night crunching numbers. You need something that's easy to use and that gives you a professional plan that you can really put into action. Welcome to LivePlan. With over 500 sample business plans covering virtually every industry, you'll save hundreds of hours of work. You can collaborate securely and easily with partners. And if you need some outside help, there are expert instructions and video advice at every step, along with free customer support. You can also build a one-page visual snapshot for quick pitching and export it so you can impress audiences anywhere, anytime. But a business plan isn't just something you create and then forget. With LivePlan, you can easily transition to setting goals and measuring progress, taking you from day one to year one and beyond. LivePlan even integrates with accounting software like QuickBooks and Xero, can handle multiple companies, and has helped more than 250,000 businesses get off the ground fast. Research has shown that when businesses plan, they grow 30% faster than businesses that don't plan. Let LivePlan help you maximize your business's potential. Get started today with our 60-day risk-free money-back guarantee. Live Plan. Business planning, goal setting, and financial tracking made easy.
So again, Live Plan, sorry to actually bombard you there with a commercial, but Live Plan is a product that we really find beneficial for entrepreneurs that are starting their business. It is a service that allows us to work with you collaboratively on developing your business plan so that as you make changes or updates, we can actually provide feedback. As you saw some of the other benefits there, if you're looking for investors or if you're working with a bank, you can actually send them a link so that they can log in and see the Live Plan as you have updated it, so that you're not having to send back large documents via email. So that's Live Plan. That's a business planning tool that the SBDC uses on a very regular basis, and we encourage you to check it out when you're ready to start working on your business plan. So a key part of Live Plan, just as with any business planning software, is the ability to create financial projections. We need to show the bank or maybe potential investors that your business is going to be capable of generating a cash flow that will keep your business alive. Ideally, we want to show that it's going to make a profit. So the three financial statements that we're looking to generate are called the income statement, the cash flow statement, and the balance sheet. And usually the bank or any other lender would want to see those for a 3-year period. And the format we tend to use is we look at the first year on a month-to-month basis, and then for years 2 and 3, we just annualize those numbers and give them the totals. What we often find as a point of, let's say, concern for lenders is hockey stick revenue growth, right? Where you're going along all of a sudden and boom, sales take off at a tremendous rate. As it says here on the slide, the miracle happens here. It's just not realistic for most businesses to have that type of revenue growth. So when you work with the SBDC, one of the things we're going to do is really work with you to kind of challenge your assumptions in regards to sales. If you come in saying, well, I'm going to work 10 to 15 hours a week on this business, but I think it's capable of doing $200,000 or $300,000 a year, we're going to say, okay, how do we know that? How can we build a model around that to justify those numbers? Because it's going to be difficult. So we want to make sure that you're developing a projection that is realistic and that is achievable by your business. So we try to stay away from hockey stick revenue growth. So now what we're going to do is we're going to change seats, and Jim Reams is going to actually present to us on the topic of what lenders are looking for when it comes to financing a business. So at this point, I'm going to turn it over to Jim, and I'm going to step out of the way. So excuse our awkward movements here, but I've got the microphone in front of me. Jim?
Thank you, Kevin. Glad to see everybody here tonight out there in the webinar world. What we're going to talk about right now is what lenders are looking for. Now, our poll earlier, it seemed that 100% of our attendees were not looking to borrow any money. So that's not necessarily a bad thing, but in the future, you may need to. And it's always helpful to know what lenders are looking for and be able to go with your best foot forward to secure financing, if that is the case. The 5 C's of credit. This has been known throughout the banking industry for many years. This is what lenders are looking for. The first C there is capacity. And this is the most important C of the 5 C's of credit. How do you intend to repay the loan? Any lender, whether that's in London, Somerset, Lexington, Louisville, New York City, it doesn't matter. This is the number one C in the 5 C's of credit. Repaying the loan. Banks do not want your collateral. They do not want anything but repayment of what they have lended out. That's it. the cash flow from the business is king. How you're going to repay this loan over the life of the loan is most important. Capital. While this is not the most important, it is very important. Like Kevin had discussed earlier, no bank out there, or it's the percentages of it are so small that it's really not even worth discussing. Banks out there are not going to lend 100% on your dream of business. And if you think about that from the standpoint, if you yourself were a lender, would you be willing to put up all your money for somebody's business venture and they not put in anything? That's really the easiest way to look at it. It's not that lenders don't believe you. It's just fact. The lender would like to see how much faith you have by what you're investing in the business. Collateral. Collateral is a secondary means of repayment. Always look at collateral as like insurance, just in case that you cannot pay back from your cash flow. The forms of collateral that are most beneficial in the bank's eye are either cash, and whether that's in the form of like a certificate of deposit, a CD, or just cash in an account, if the bank had a hold on the account, or real estate. Anything else really, don't set your mind to thinking that these are good forms of collateral. We all know that our vehicles or a boat or any kind of items such as that maybe have value to us. In the bank's eyes, it does not. Primarily because that is a depreciating asset. Real estate, we all hope that that it does appreciate, and for the main reason is they're not making any more of it, because real estate is there, and that's what's it's not going anywhere. But the vehicle that you buy today, as soon as you drive it off the lot, it goes down in value. We all know that. So that's where collateral comes into play. Conditions. The local economic climate and conditions, both within your industry and other industries, that could affect your business. Think about this. If you're wanting to start a snowshoe company in Miami, Florida, that's probably not going to be the best, idea. Now, granted, today we have so much more opportunities with businesses just because of the internet. Where we can sell something in, South Central Kentucky to somebody in Seattle, Washington, and it makes sense. So, in my opinion, conditions have increased for, we have many more opportunities than we did before. But when you're looking on the local level, you have to consider where you are and what makes sense. And the bank is going to be thinking about this as well. The last C of credit is character. If you're a dishonest person, if you haven't paid your bills in the past, and this is where a credit report's going to come into play. Lenders aren't going to look too highly on that. One thing that I can say is sometimes especially if you're wanting to go borrow money, we all know people that are in the banking industry, or we've been familiar with somebody in the banking industry. And maybe you may think, I don't really want to go see Bob because, I really don't want him to know my business. And I want to go over here and see Bill. I don't know Bill, but, maybe he could help me out with this loan. Well, look at it this way. Would you rather go borrow money from somebody that knows you as opposed to somebody that doesn't know you? Somebody that doesn't know you, they, may listen to your pitch and just turn you off right at the drop of a hat. Somebody that knows you, they may listen to you better. Always think about it that way. It is best to have somebody that as opposed to because when you go in for a loan, the bank is going to want to know everything. It's not going to be any secrets that they're going to want to know. And if you're a person of good character, you shouldn't have any issue with this. Here's some questions that you need to be prepared to answer. And now some of these may sound kind of, obvious, but it's the truth. When you're sitting, in your chair on the other side of the banker, you're going to need to know these things. How much money will you need? Sometimes we think in large numbers or even numbers. I need $100,000. I need $1 million. I need $10,000. Whatever that is, a specific amount will make more sense in the banker's eyes because it will show that you have actually put this down on paper and saying, I need this much money. There's two things about how much money you need that are very important. Sometimes you need much more than you think. Sometimes you need much less than you think. And it's really, really wise to know those numbers. How will you use it? This is very important. One thing that I can tell you is any type of projection that you give to a banker, do not have salary in with money that you are borrowing. Any banker worth their salt is going to look at this and they're going to cross you off the list because you don't want to borrow money to pay yourself. That's just a recipe for disaster. Why do you need the bank's money? This should be pretty easy to explain. I need the bank's money because I have so much to put into this, but I need more to pay for X, Y, and Z. How will you repay the loan? This is what we discussed earlier. This shows as number 4 on here, but this is number 1. This is most important because the bank wants their money back. When will you pay it back? Will this be a monthly payback? Will this be a quarterly payback? Will this be an annual payback? I come from a farming background, so it makes sense to me. With you wouldn't want to set up a cattle farmer to pay back things monthly when he's going to buy livestock and then sell them at 9 months down the road. You're not going to get your money back on a monthly payback. And this could be if you're in the retail business, a monthly payback may be more suitable. What happens if something goes wrong? Nobody wants to think about the bad things about our business that we're starting, but it makes a lot more sense when you go into the bank to say, if in the event that this happens, this is what we're going to do. They want to know this. Why is this loan good for your business? This should be, one of the things that we sit and we think about quite honestly, because if we don't need to borrow money, you shouldn't borrow money. It's just another expense. It's just another bill. If you can make it on your own, great. And as the SBDC, we're never pushing anybody to borrow money. There are times to borrow money and there are times not to borrow money. And this is a good question to ask yourself, is this something that I really need at this time? Yes.
Does having a spouse or secondary source of income a favorable consideration for a lender?
Yes, it is very. Kevin just asked if a spouse or having a secondary form of income is favorable to a lender, and this is 100%. This is the truth. If you, your spouse, your partner, whoever that is, has a secondary form of income, if even this business that you're going to start, if it's going to be a side business or something that you hope to, make into your sole business in the future, having a secondary form of income is very, very important, because what that shows is your lifestyle is not going to change if this business fails. That you're going to have money to pay the mortgage payment. You're going to have money to pay the rent payment, pay for incidentals, your car payments, all these things. It's not going to come from this business venture that you're looking after. That's a very good point there, Kevin. And also, it's just another form of paying the loan back too. If you or your spouse has a certain income that could make that payment, if you were set up on a monthly payment or quarterly payment, that's just another form of the bank being able to get their funding back. This next slide we have here, the loan review process. Your initial interview that you're going to present your proposal to the bank. I can always say, always either call or drop by and schedule an appointment. never go into a banker just, thinking, okay, I'm going to go in at 1 o'clock. I've got all my stuff ready and they're just going to be there waiting on me. Never do that. Nobody likes to be, just bombarded with, questions and not being able to, I guess, do a little planning beforehand. Always call for an appointment. Always call for an appointment. Credit investigation. This is where your credit report comes into play. Dun & Bradstreet. This is something that we can, I know Kevin was using the example earlier of a coffee shop where the lender could go in and look, is our coffee shops on the upswing? Are they on the downswing? Is this something that, makes sense as far as a business? This is where this would come into play. Credit reporting, this is not something that you would necessarily need to bring with you if you came to a loan interview. The bank's going to order those on your behalf after the fact anyway, so don't be too concerned with having one before you go in. Financial investigation, your current ratios, these are things that the banker himself, herself, are going to go through. Do these numbers make sense? Your cash flow, your projections, what type of industry, what makes sense in this industry. Is 20% growth good in this industry? Is that way out of line? Is it in line? This is also something we can help you with through LivePlan, and it's very, very user friendly. It's remarkable. It really is. Loan decision, whether that be through the lender, maybe a loan committee, maybe the board of directors, SBA. Most of your smaller hometown banks, your decision is going to be made right there. Also, depending on how much you're borrowing. If you're borrowing anything less than $50,000, if you're talking to a lender, they can probably approve that themselves. If it's anything that has maybe real estate tied to it or over $100,000, $200,000, it may have to go before a committee. You may not be able to get a decision, immediately, or even within a week. It may take a couple of weeks before that committee meets together. Board of directors decisions on loans are normally in the $500,000 range and above. That's just kind of a good rule of thumb to think about. When you close on a loan, if any of you have gone through a closing on a mortgage, you're already remember how much the paperwork is, and you get a book there that you have to sign. The good thing about commercial lending is there's not a lot of paperwork to go through it. It's usually just a note. There'll be some insurance documents that you're going to keep the collateral insured, things like that. It's really not too bad. Really not too bad. Something to go through. But the closing is usually pretty quick. You're going to spend much more time on the initial process, whether that's your application and then just getting the decision. Because once it's approved, it's pretty quick. Loan checklist. You need a business plan. You need financials. This is something that we can help you with as far as with LivePlan. Think about your collateral. What do you have to put up for this? Do you have real estate? Do you have, business equipment that you can tie into this? What kind of cash do you have that you're looking to, tie up in this business? Personal background resume. If you are somebody that has, let's say you've got 10 years experience in the restaurant business and you're wanting to open a restaurant. Well, that's going to look more favorable than, say, somebody that is worked for 10 years in maybe financial services, but they want to start a landscaping company. I'm not saying anything about either one of those. It's just if you have a history in that business, lenders are going to look more favorable. A resume is a good idea to have something when you get to your application. In my history in banking, I never had anybody give me a resume, but that's not saying that that's not something that could be beneficial. Personal financial statement. Kevin was discussing earlier about setting up the entity of your business. While you may not be financially liable from an LLC standpoint, personally, the bank is still going to want to see your personal financials. If you've got a 500 credit score and you've got tax liens and things like that, that doesn't mean that you're still going to be you're just going to be able to get a loan based on your business name. You're still going to need some to have a clean history for the best chance to get a loan. Be prepared to bring your personal tax returns. Credit reports, just like I discussed earlier, don't necessarily need to worry about that. It's a good idea to know what your credit report is because the lender's going to ask you, say, hey, how's your credit? And it's good to be able to go in to say, yeah, it's good. Last time I checked my score, it was 750. I don't have any, issues on there. Legal documents, as we were discussing earlier with an LLC, when you file that with the Secretary of State's office, you'll actually get a articles of organization that's already printed out for you that you can print out. You'll need to have that anytime you go to the bank to set up an account or to get a loan. Remember, develop a relationship with your lender. I don't think that I can emphasize this enough. You want to be somebody that you feel comfortable with, somebody that you feel like you could call at 6 o'clock at night and say, hey, I've got a question. That somebody that's going to answer your question, not somebody that you don't have I guess a good rapport with. A longtime lender that I used to work with years ago told me something that it really stuck with me. He said, lend money to your friends because your enemies won't want to borrow from you. So think about that. If there's somebody that you don't like or you don't have a good, reputation with, whatever that may be, that's a lender, you probably don't want to go borrow money from them. It needs to be somebody that you have an interest in. Don't wait until you run out of money to ask for money. Now, this may sound kind of odd, but I think this is where our projections come into play. If you know that maybe 6 months from now, 9 months from now, you may be getting low on your cash flow, that's the time that you need to go talk to your lender and say, hey, I need to borrow some money, but it's going to be, out. They're going to look on that more highly than if you come in and you say, hey, man, I need some money tomorrow. It's because right there that shows that you don't have the business acumen to see what's happening in the future. You've waited too late to borrow that. And sometimes if it's needed that quickly, the bank's going to take longer to understand why has this happened? What's going on with your business? This kind of ties into this last one. When approaching your lender for a funding request, be prepared to be patient. This doesn't just happen overnight. Unless you have something that is secured by a CD or certificate of deposit, that's the only way that it's going to go that same day that you can get funding that day. So you have to understand, the bank has to do their due diligence as well. They're not just going to, take your word for it, if you will. Any questions right now? We are through with our lending part of the webinar here. Not seeing any questions, but I'll give you guys a moment. And also, if there's a time where you need to, email either Kevin or I, if you think about anything after the fact, we'll be more than happy to answer those at that time as well.
Does a lender have a preferred source of collateral?
The best form of collateral besides cash itself is real estate. No questions asked. That's it. There's some things I could think of that may be an appreciating asset, but that's it. Just real estate. Don't even think about cars or unless it's a small amount, a very small amount. If you owned a vehicle that's worth $20,000 and you're wanting to borrow $5,000, well you can think about that. But real estate. That's it. So, any more questions? I think we're moving on now. Seeing none. Insurance considerations. being in the banking industry and the insurance industry, I've had experience in both of these, and this is another reason that I feel that my expertise can help you in your business growing endeavors. And we'll get into this. Insurance is such a fun topic to discuss, and I'm sure everybody is just dying to, or chomping at the bit to hear this. So I'll get to it and go from there. What is insurance? Insurance is the transfer of risk, and what this means is you as the business owner, if you are paying a premium each month, and the insurance company is the one that is actually taking on the risk. What an insurance premium is a number that is devised that says that, okay, the amount of risk that we are taking on, this is how much this risk is going to cost you each month for us to take advantage or take this risk on as a company. Every month when we pay our insurance premiums for whatever that is, whether that's auto or home or life, sometimes that's a tough check to write each month, because we know that we're not necessarily going to receive a benefit from that every day, but it's something that we have to have. And as a business owner, it's no different as far as with your business, your building, or your inventory, or the liability of your business. It's something we still have to pay each month to protect us. And really, what it is, it's paying for peace of mind is what it's doing. Okay, types of insurance. A business owner's policy. Sometimes you'll hear these referred to as a BOP. We're probably more familiar with quote unquote full coverage auto insurance. Keep in mind, there is no full coverage auto insurance or any type of insurance. And I've put on here the full coverage with exclusions. You have to understand that whatever is inside of your policy, that's what is going to be insured. This does not mean that everything will be insured in your quote unquote full coverage insurance policy. Nothing is, there's no, no one would be able to afford full coverage of anything. Your business owner's policy, this is I guess you could say a catch-all. It's property and liability coverage in a single policy. And for most businesses, this is probably your most feasible route to go, the most economic route to go. Some businesses may be a little bit different than others, where you may have to have separate policies, but this is a good way to go. This does not mean that this would be a policy where you have to own, like, wherever your office space is. You can have a business owner's policy and rent or lease the property that you're in, and also have liability coverage with that. Another type of policy is just a commercial fire coverage. This would be if you owned a building and you're just having the building coverage. If the building were to burn to the ground, this is going to take care of the structure. There's a policy that you would also have that would cover the contents. Sometimes these policies are tied together, sometimes they're not. It all depends on every policy is different, and every insurance coverage that you need can be different. But this is a baseline of what it can be. General liability coverage. This is for anything that could happen. That could be if slip and fall. Anything that there's advertising liability coverage. If something that you sold, if you said that it was going to do this and it didn't, and someone sold or sued you for this, this is going to cover you on this case. And general liability coverage, this is something that is very, very important for the business owner, especially when we're discussing things today. It seems like that we're in a society that is ready to sue at a moment's notice. So this is very, very important, very important. Also, other types of insurance, business auto insurance. If you are starting a business and you are driving around in a vehicle, Sometimes people, this is going to be one of those things where the vehicle that you're using, whether or not you need to switch it to a business use or not, it's something that you'll need to discuss with your agent. Everybody's different in these situations, so it is a good thing that you need to talk to your agent about. Life insurance, to me, this is one of the most important insurance products that you can buy, especially for a business owner. If you are a self-employed, sole member, limited liability company, if you have a family, especially, if something happens to you, that income is totally gone. This is where life insurance comes into play. I have on here buy-sell agreements. If you are in a partnership with somebody, let's just say, for instance, that you and your friend are deciding to go into a business together, and let's say both of you are married. Well, in the event that something would happen to one of you or your partner, would you want to be in business with their spouse? Maybe, maybe not. This is where a buy-sell agreement would come into play and is funded by life insurance. If both of you decided, our business is worth, let's just say $100,000, well, what you would do is both of you would have a buy-sell agreement, and it would be funded by a $100,000 policy that would be on each of you. Something should happen to one or of the partners. That funding of that buy-sell agreement through life insurance would buy out your partner, and then you could just take on the business as your own. Key person policies. Let's say that your business grows so much that you have somebody that works for you. That's your business relies on this person. If they were not to be there, if something happened to them, you'd need to replace this person. Well, that's what a key person policy can do, is to in the event that something should happen to them, it would pay the business to be able to absorb what happened to that person in the time where you could hire somebody else to take care of their job. Or it's also something that is kind of a carrot that you can hold out there if you have a key person that could say, hey, I'm paying on this insurance policy for you, and if it's a whole life policy, which you would want to do with a key person policy, it would build a cash value and say, hey, if you stay here for X amount of time, we'll give you the cash value that's in this policy. Something that's probably a little over what we're discussing today, but it is something good to keep in mind.
Curtis asked about workers' comp.
Workers' comp. If you're going to have employees, you have to have workers' comp. That's from a standpoint of anybody that is, if you have a W-2 employee, you have to have workers' comp insurance. If they are a 1099, you do not. That is the case. But I would be hesitant to say that you should just hire everybody as a 1099 employee. At some point, that will be a question mark from the IRS. So approach that very very carefully. And also, as always, your CPA and attorney, these are people that you need to discuss this with further as well when hiring multiple employees. Remember, thanks for the question, Curtis. Appreciate that. Remember, when it comes to coverage, you really do get what you pay for. When you go into buying insurance, cost should not be your only measure of whether I have good insurance or bad insurance. You really do get what you pay for. And this comes into the next little bullet point there. Read your policies. I have that on there 3 times. Read your policies. Here's what happens, in the insurance game every single day. Somebody comes into the office and they're upset because they said, you're not going to pay for this. Well, it may have not. It wasn't in the policy. If it's not in the policy, it won't be paid for. Part of that is on the agent. Part of that is on the insured. You have to know what you're paying for. If you're paying for a policy that will pay for, in the event, let's say your business, you have a roof that collapses. Well, is that going to pay for the replacement value, or is it going to pay for the adjusted value of that roof? It's something you have to know, and you have to know what you're paying for. Insurance is usually as good as your agent. Choose wisely. Go around and interview agents, just like you would go to a bank and you're going to go for applying for a loan. Interview who you're working with. If it's somebody you feel like that has a good history of working with people and business insurance, that's probably who you want to go with. Somebody that's just a auto and home insurance agent might not be your best choice as far as to insure your business. This last bullet point here: insurance is meant to put back together what was taken away the day before. It's not a lottery ticket. If the building that your office space is worth $100,000, and everything your items that you have, your computers, your desks, things like that are worth $10,000. If all of it burns today and it's just it's all destroyed, the insurance company is not going to write you a check for $1 million. It's not going to happen. They're going to put it back to the way that it was. Another key thing that is wise to do is always keep track of what you have, because in the event that everything was destroyed, the insurance company is going to say, okay, what did you lose? If you've got an itemized list of everything that you have much better chance to getting back everything that you had, as opposed to just having to think, well, I had a desk and I had a computer and I had this. And if you have proof of it, it's much, much easier in the event that the worst happens. It is. Any questions? Any questions? I know insurance, we kind of moved through that pretty quickly, but it's kind of cut and dry when it comes to insurance. So from a business standpoint, there's not a lot of insurance coverages to choose from. Liability is one of the most important, and it all depends on what type of business that you're in to decide what kind of coverages you need. So, any questions? We're glad to answer them. Seeing none, we will move on. Do video. All right.
In the Far East, they have something that's called the Chinese bamboo tree. The Chinese bamboo tree takes 5 years to grow. They have to water and fertilize the ground where it is every day. And it doesn't break through the ground until the 5th year. But once it breaks through the ground, within 5 weeks, it grows 90 feet tall. Now the question is, does it grow 90 feet tall in 5 weeks or 5 years? The answer is obvious. It grows 90 feet tall in 5 years, because at any time had that person stopped watering and nurturing and fertilizing that dream, that bamboo tree would have died in the ground. And I can see people coming out talking to a guy out there watering and fertilizing the ground that's not showing anything. Hey, what you doing? You've been out here a long time, man. And the conversation in the neighborhood is, you growing a Chinese bamboo tree, is that right? Yeah, that's right. Well, even Ray Charles and Stevie Wonder can see ain't nothing showing. So how long you been working on this? How long have you been working on your dreams? And you have nothing to show. This is all you got to show. People gonna do that to you. And some people, ladies and gentlemen, they stop. Because they don't see instant results. It doesn't happen quickly. They stop. Oh, no. You got to keep on watering your dream. That is not going to happen as quickly as you want it to happen. A lot of things are going to happen that will catch you off guard. And so therefore you've got to deal with and handle it as it comes. And not only that, but that faith and patience drives you into action. You've got to keep moving and keep plugging away. See, during those hard times, we didn't know how you're going to make payroll during those times. when you fail and things didn't work out, they were nowhere to be found. But you know what I discovered? When you're working at your dream, somebody said the harder the battle, the sweeter the victory. Oh, it's sweet to you. It's good to you. Why? See, when it's hard and there's a struggle, see, what you become in the process is more important than the dream. That's far more important. The kind of person you become, the character that you build, the courage that you develop, the faith that you're manifesting. Oh, it's something that you get up in the morning, you look yourself in the mirror, you're a different kind of person. You walk with a different kind of spirit. And people know that you know what life is, that you have embraced life. You knew it was hard, but you did it hard.
All right, folks. As you can see, Jim and I have switched seats once again. We're coming into the wrap-up section here, and so I wanted to just take a moment. Thank you all for staying with us this long. All of the stats I was looking at said, never hold a webinar longer than 90 minutes. And so we're coming up on, we just passed 90 minutes, but you all hung in there. So I appreciate that so very much. One thing that I wanted to cover, since we're basically at the end here of what we want to talk about with you and let you get back to your lives, is just share a little bit about what's coming up next week. As I mentioned, this is a 2-part webinar series. So next week, you're going to have the opportunity to hear from a CPA from Baldwin CPAs out of Richmond. They're really going to go much deeper into legal entity options and tax considerations than what we did tonight. So I encourage you all to be here if at all possible. Tune in next Thursday at the same time for that discussion. We're going to go through legal entity options. We're going to talk about taxes. Giving you some homework after this session ends, you're going to receive an email from us that has some attachments. And those attachments are some of the things we want you to work on between now and next week. So it's going to have that traits of a successful entrepreneur. It's going to have the My Business Goals worksheet. And it's also going to have that sample spreadsheet for you to start filling out your startup expenses, if you have any. But that will help you basically put some things down on paper to take those practical next steps so that you'll be ready to register your business when the time is right. In regards to some of the other topics we're going to cover, just so you can be prepared, like I said, legal structure and taxes and bookkeeping, those are all 3 big topics to talk about. So we're going to give those the bulk of the time next week. But then we're going to get into what I think is one of the critical success factors of any business, and that is this concept of systems. What systems can you put in place so that your business is not dependent upon a person, but is dependent upon a system? And so if you've not read the book, The E-Myth Revisited, which is by Michael Gerber, I encourage you to go out and get it. Get it right now. It's a very simple, easy read, but I promise you the stuff that Michael Gerber goes through in that is what most entrepreneurs encounter within the first, say, 3 to 5 years of their business. And so Michael Gerber really talks about how do you get past this infancy stage of business and really build a business that grows to where you want it to be. We're also going to cover some basic information about how do you market your business online through social media and overall digital media. And then finally, we're going to end up next week talking about what are your next steps. Is the next step that you need to schedule an appointment with Jim or me to talk about how to register your business? Is it that you're going to go for funding and you need help getting started on your business plan? All of those things are coming up next week. Now, thank you all so much. Thank you for staying with us till the end. I want to give you what we have developed at the KSBDC to guide you through the process of launching your business. So this is the Ready, Set, Launch guide. So the PDF that just popped up on your screen, you should be able to see the option now for you to click download that file, okay? If you don't see that, just click on the chat and let us know. But it should be right there where all you got to do is click on that blue button that says download file. This PDF, it's rather large and it's very comprehensive. All of the things we've talked about tonight, plus all of the things we're going to talk about next week, and even some more stuff, is included in this Ready, Set, Launch guide. You can either print it out if you want to, have a checklist that you can kind of go through each thing as you're starting your business, or just keep it as a digital PDF on your computer that you can go back and reference as you go down this path of starting your own business. But the Ready, Set, Launch guide is something we've prepared for you, and we wanted to share that with you tonight as our appreciation for you being able to stick with us this entire time. Encourage you to provide us with some additional feedback. If there's anything that you found tonight to be distraction, or maybe you had additional questions about and wanted additional clarification on, please reach out to us. You can either contact Jim or myself, or you can leave the notes here in the chat room if you'd like, or give us a call. If you're ready to take that next step and say, hey, I need to do something between now and next week, and I need to schedule an appointment, then by all means, reach out to us so we can get that on the books and get something scheduled. We're more than willing to meet with you before next week's session. Having said that, I thank you all very much again. On behalf of Jim and myself, the SBDC really appreciates everything that you all were able to bring to our presentation tonight. We hope this format was beneficial to you. We hope that you found it convenient to attend, and that you found the technology to be conducive to learning and not a distraction, because that was certainly not our intent. Again, next Thursday, 6 p.m., we will begin with session 2 of our webinar in the Ready, Set, Launch series. So if you have any other questions in the meantime, feel free to post those right now. If there's not any other questions, we will go ahead and end a little bit early, seeing as how we're an hour and 40 minutes into our broadcast. So again, thank you all very much for your attending. You will receive an email shortly after this session with your homework. And you will also receive an email that contains a replay link. So if maybe there was something you missed and you want to go back and watch it again, that replay link will come to you tomorrow. And it'll basically tell you how you can access a recording of everything that we talked about tonight. So again, let us know how we did. We appreciate your comments and suggestions. We really rely on those when we're trying to determine what we provide as far as an SBDC. And so we really appreciate your feedback. Thank you all very much. See you next week.